Hey, what's up, everybody? It is Friday, March 12th. Got the cowboy hat on. Hello to all my friends in Texas, all my friends in the western states, all my cowboy friends. I'm here in New York City. New record high in the Dow Jones. Today, new record high in the Dow Jones. NASDAQ down a little bit on rate fears. Let's talk about the rates. There is some data that was released by the Fed today showing that primary dealers, mainly you're talking about the big banks, they were net sellers of treasuries in the week ending March 3rd. This was my, fear, concern. I'm not really afraid of it, but I was expecting to see this because in the week ending March 3rd, we had that very big reserve build of 180 billion. All right. And in this recent week, just ending on this last Wednesday, we had another 81 billion. So in the last 2 weeks, 162 billion of reserve increase. But in that March 3rd week, we saw that the banks, the primary dealers, were unloading treasuries, and the selling was mostly concentrated in T-bills. Now let's talk about these yields for a second, because at one point today I think we got the 10-year up to 1.63, something like that. You know, that's where we were a year ago, before the pandemic hit, like in February of 2020. That's no big deal. A yield of 1.6% on a 10-year, that is consistent with a growing economy. And I think we could see yields above that, because with this new round of stimulus and the existing stimulus that is getting pumped into the economy, we could see a boom, a really robust period of growth. And so it's not surprising to see that yields are backing up like this. It's just not. We have a lot of stimulus that's about to hit on top of the existing stimulus. How long have I been saying this? I've been telling you guys that the existing stimulus, even without this new round that has just been signed by Biden, the existing stimulus was enough to sustain the upward trajectory of the market. And once the economy started opening up, there was going to be a boom. Now they added even more stimulus onto this. I've said in the past, a lot of people, they're just like, they're looking at this scratching their heads and they don't understand it. I've said in the past that there is no amount of economic weakness or economic, malaise that can't be fixed by a sufficient fiscal response, as long as we have the real assets there. The real assets meaning labor, meaning resources. Okay? And we do. So the fiscal response is there. The economy is going to start opening up. Look, a lot of this inflation stuff, and I do believe we're in a significant, or we will be in a significant growth scenario, a significant growth situation. A lot of this inflation stuff has been due to closures, supply chain disruptions, reduced output, where, demand is basically almost, at the same level because of fiscal support, but reduced output. So you have, price increases. But once the economy starts opening up, what? Output increases, supply increases. You should get some moderation in the inflation situation, but I still think you're in a major growth environment, or we will be in a major growth environment. Something interesting, I saw a headline that said, this is from Blackrock. Blackrock. I did a couple of videos on Blackrock. These guys, dude. The guy Larry Fink, when he said MMT is garbage, like his firm, remember I think they make something like 0.7% return on assets. They manage something like 9 trillion. They're terrible. They're terrible. I mean, come on. What is the point of BlackRock if you're making a 0 point, maybe it was less than that, I don't remember. I got to go back and look at my video that I made like, it was about a month and a half ago, I think maybe back in January. They're terrible. I mean, he shouldn't say MMT is garbage. I mean, he ought to really study it. And the irony is, I think he learned or was informed about MMT years ago by Warren Mosler, who's like, he's like the creator, the founder of MMT. He was one of the first guys to really start talking about it. Anyway, they said gold is, what was it? What was the quote? Gold is failing as an equity hedge. Well, let me tell you something, guys over there at BlackRock. Gold was never, ever an equity hedge. Okay, I don't know where this idea came about that gold was an equity hedge. Gold reacts to growth or lack thereof, economic growth. It is an industrial metal. It is used in jewelry, fabrication, and it is used in certain industrial processes. And recently it has become more accumulated by central banks as a form of reserve diversification. This idea that gold is he said, the headline was, gold is failing as an equity hedge. It was never an equity hedge. Now again, I'm not a gold bug. I've never been a gold bug. I don't believe gold is money. I'm an investor. I'm a trader. I love the fact that this is like the 4th or the 5th week in a row that every time, I go to the business headlines or I go to the financial headlines, what is it? Gold is failing. Gold is crashing. Gold is this. Gold is that. Like, really, we have gone from a situation last August where the headlines were exactly the opposite. And it's not just about the headlines, guys. If you look at what producers, gold producers who own the physical, okay? And they were selling back in August, and they were selling in the 1800 level. They've been consistent buyers down here. They've been lifting their hedges, which means they've been covering their short positions. They've actually been adding long futures positions, which is, it's uncommon for producers to do that. I mean, basically they're on the short side. So you have a headline like that. I just look at it. Gold is failing as an equity hedge. It never was an equity hedge. Now there's some inflation hedge aspect to it. I even think that is kind of bogus. I mean, my best trades in gold, let me put it this way. My best trades in gold, my best investments in gold as a theme have been when we have seen acceleration in economic growth. And also, on the flip side of that, some of my best short trades in gold have been when we have seen economic contraction or slowdowns in economic growth. Those were some of my best short trades in gold. Has nothing to do with an equity hedge. But I like the fact that BlackRock is saying it because it's BlackRock. So yeah, new high in the Dow Jones. I've been telling you this was going to happen. Like, I've been saying this is going to happen. A lot of people, they don't want to, they keep painting this picture as a bubble. I mean, this is what you get with a major fiscal response. This is what you get, and there's nothing artificial about it. The cars that are sold as a result of the fiscal response are not artificial cars. The homes that are bought as a result of a fiscal response are not artificial homes. The food that we eat as a result of a fiscal response is not artificial food. The medicine that we take, the health care that we receive as a result of a fiscal response is not artificial health care. I mean, come on. So that's where we're at. Anyway, Have a great weekend. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. See everybody on, well, I'm going to do a couple of videos over the weekend. Have a nice weekend. Bye.